This is Dr. Daniel Paul, Easy Orthopedics, orthopedic surgeon, and today I'm going to explain the best health insurance options if you're self-employed. Now, I'm self-employed, and first I'll tell you what I do for health insurance. I use the combination of direct primary care. Now, if you don't know what direct primary care is, you should find out. But basically what it is you pay a family medicine doctor a certain amount of money per month, and they give you as much care as you need. They can give you labs at cost, medications at cost, and it's good enough to really cover 80% of what you really need from a typical health insurance plan. Now, it's different than concierge medicine. Concierge medicine is something that a doctor will bill insurance and then charge on top of that. They double dip and it ends up being a lot more expensive. And I don't think the care is any better. So the first thing that I do is direct primary care doctor. I pay a certain amount for my family and myself, and that covers mostly everything that I need on the low end. Now, on the high end, what I do is I use a health share. So a health share isn't exactly health insurance, but if you pick the right one, it's better for a lot of reasons. With the health share, there's no networks. You can go wherever you want. The amount that you have to pay is usually less. The issue is that, like I said, it's not quite insurance. So you're functionally uninsured to these hospital systems. So you have to go there and basically get self-pay rates, which are usually better than the insurance rates. And then after you pay or get a payment plan, you submit that to the health share company, and they'll usually reimburse you. Other issues with health shares are they don't really cover pre-existing conditions, and certain things like they won't cover related to contraceptive services. So there's some nuances to it, but let's say you fall and break your leg or get in a car accident or something like that, it can help with that. So that's what I personally do. Now, some of them are denominational, meaning that they'll be like, I use CH Ministries for myself, but there's non-denominational ones as well, like such as Sedera. The thing is, you have to do your homework with these because some of them are like, it's not a regulated industry, so some of them aren't too great. But if you find a good one, it can work great. So that's what I do. I do DPC, and then I use a health share. And it's significantly less expensive, and I feel like better coverage and care than what you would get with a health insurance plan. That being said, if you don't want to do that, what other options do you have if you're self-employed? Well, if you're starting out and you have absolutely no money, you can apply for Medicaid, and you may get it, and that would last for a while, and that'll at least cover you on really the catastrophic end, and if you need to make a doctor's appointment. If you're somewhere else in the middle, then you're kind of looking at Obamacare plans. Now, Obamacare plans, there's no maximums. There's no pre-existing conditions. There's some positives to them. The negatives are that they can be fairly expensive. So if you make a certain amount of money, so with Obamacare plans, a lot of people get a subsidy. So if you're above the Medicaid level, you don't qualify for Medicaid, they'll give you a subsidy, so it might not actually be too expensive per month, only a couple $100s. If you make more than that, you won't get any subsidy. And the problem with these plans is it may be a plan that costs you $800 a month or $1,000 a month for a $7,500 deductible in a network that's razor thin. So that means you essentially have to pay $20,000 a year, right, between your premiums and your deductible before they pay $1. And if you're out of network, which is super easy with these plans because their networks are so thin, then they won't even pay that $1. So then you're paying $20,000 for nothing. So you kind of have to ask yourself if it's really worth it. Now, that being said, if you do have an emergency, they're supposed to cover emergency care. But then again, with insurance companies, I don't trust them. I don't take them in my personal practice for my patients. I run a cash practice. But they can get kind of shicey with that stuff. So those are your other options. It should cover you in catastrophic. It's pretty expensive. It's very difficult to use for normal exams. They only cover like one exam a year and don't cover any labs. So you're really best pairing that with direct primary care to cover all your other needs. Those are the basic options. Oh, I mentioned before, a car crash. If you do get in a car crash, just know that you have health insurance through your car insurance company. They cover not only the damage to your car, but the damage to you, especially if someone hits you. So just know that you do have some options if that happens. But like I said, the Obamacare plans if you get a really good subsidy, then they might be worth it. Otherwise, I really think you're better off with a health share, and whatever you do, direct primary care is going to be the way to go. So I hope you found this video helpful. Before I stop, one thing that you definitely want to avoid there's short-term health insurance plans. Now, when Obama was president, he capped these at only 3 months. So you can only get these at 3 months. And during the Trump administration, they lengthened them to a year. The problem with that, with these plans, is they'll say they'll cover like $750,000, but it'll only cover like $2,000 per event. So people think they have health coverage, and then they go to the hospital and find out for their whole surgery and hospital stay, the insurance is only paying $2,000. These are like called like Golden Rule, and there's a bunch of other ones. These are not exchange plans, and they're not quite regulated as much. And those are essentially scams. I would avoid them at all costs. I think they functionally don't work at all, and you're better off, if you're want to go with one of the plans, go with an Obamacare plan. So I would say avoid that. So I hope you found this video helpful. If you have any questions, please leave them in the comments below. If you like this video, please like and subscribe. We put out new content every Friday. And thanks for watching.